So in Strategic Survey 2019, we have an essay on what the political impacts will be of more expensive oil. Oil, of course, famously fell well below $50 a barrel in 2014, remained there or below that level for some time, but is now approaching $75 or even higher. So the impacts of 2014 to 2017 were quite stark. Countries like Saudi Arabia saw their budget surpluses just disappear. They had to embark on austerity. They adopted impressive plans for economic restructuring. Russia, Azerbaijan, Kazakhstan, they all experienced devaluations. Most of the former Soviet ones, bar Russia, saw their sovereign debt increased quite dramatically. Now oil is higher, what are we going to see? Well, I don't think we'll see, or we don't expect anyway, a huge fiscal blowout from Saudi Arabia or Russia. But some of the difficult choices that they had in terms of their domestic economies, they can now probably put off. Their budget deficits have all but disappeared already, or certainly much smaller than they would be. So that then puts the focus onto the big oil importers, and particularly those who subsidize domestic consumption. And here it's largely an Asian story with a little bit of Latin America and a little North Africa. India, Philippines, Vietnam are all large importers of oil. For years now they've had relatively low import bills and relatively low inflation pushing through. That's going to change. But the bigger problems actually come from the subsidizers, those countries, North Africa and elsewhere, Turkey included, that tend to help cushion their populations from it. Already we have seen protests in Jordan and Tunisia over oil price subsidies being removed. And I think that's a sign that we're going to see repeated in 2019.